Have you ever faced a situation where your supplier collected your GST, you paid it in good faith, and then later, boom, the department denied your ITC because the seller didn't file his return? If yes, then this video is for you because the Supreme Court has made a landmark judgment which protects the honest taxpayer from this exact similar situation. So let's decode this judgment, what it means, how it impacts you, and what precautions you still need to take as an honest taxpayer. For years, the biggest pain point in GST has been the denial of the input tax credit even when the buyer has done everything right. Imagine this, you buy goods from a registered dealer, you pay taxes, you take invoices, you file your return, but the supplier did not file his return. What happens next? You get a notice, your ITC is blocked, you are asked to pay tax again for literally no fault of your own. This is what exactly happened in the case of Shanti Kiran India Pvt Limited, and the Supreme Court in this case has set the record straight. The Supreme Court of India upheld the ruling of the Delhi High Court and made it crystal clear that the bona fide purchasing dealers cannot be denied ITC if the seller was registered at the time of the transaction. So let's make this practical. Suppose you are a buyer, you are in a trading business, you buy goods worth rupees 5 lakh from a dealer who is registered at the time of the transaction. You take the invoices, you made the payment, and you record it in your books of accounts. Later, you found out that the seller has not deposited its GST to the government. In the past, officers would have come to you, they would have denied your ITC saying that the tax has not been received by the government. But now, after this judgment, you as a buyer is still protected as long as the supplier was registered at the time of the payment 1, you have valid invoices 2, you have proof of payment through the banking channels 3, and the most important point is the purchase was made in good faith, the purchase was not bogus. So this ruling strengthens the core principle of the GST, seamless credit flow, and protects the honest taxpayers from someone else's wrongdoing. So if you have acted genuinely, the department's remedy lies against the defaulting seller and not the honest buyer. So as a practicing professional, I can tell you that this is a big relief for the businesses that has been harassed by the department for doing everything right. But do remember, good documentation is the strongest protection. If you found this video helpful, please share it with your friends and do let me know in the comment section if you have ever faced a similar situation.